Hey guys, Mike here. So, oh boy, what a day. Or maybe not, depending on which side of the fence you're on, right? I mean, because you thought CPI comes out, just for those who hadn't heard, who live under a rock, 6.5% in line with what we think. Core comes in pretty much in line, right? So we go, man, it's going to bust out. We're going to bust through the 200 on the daily on the S&P. We're going out of this, descending channel we've been in for well over a year now. And this is it. This is it. And you go, wait a minute, what are we up? I mean, don't get me wrong, small caps had a good day, up over 1.5%. The other indexes just kind of go, red, green, red, green. What happened? Well, let me go ahead and break the story for you here. It's called killing premiums, right? I went through yesterday and looked at all the people who were playing this, event here. I mean, there was a lot of calls and puts, right? People playing this, a lot of straddles put out there. So what do? You make sure the market stays in this little range right here. That's how you get that money. All right, there's no such thing as coincidences, and just wait until you see where the market left things off today. Again, no such thing as coincidences. I'm going to show you that right there. And then I'm going to tell you, we're going to go into us a little bit, the consumer, because that's what this is all about. And you can see, obviously, just real quick, inflation dropping again. So we're going from 9.1 to 6.5 since June now. We're hitting expectations, the last 3 months now. Now, one thing to keep in mind, we're 70% services, and what do you see happening here? The goods inflation has been falling off a cliff. That would be the little line right there going down. But the services inflation, which is the more important one because we are a 70% services-based economy, continues to go up, right? Just not as fast, but it continues to go up. Now, getting into the SPY here, right, the S&P, shockingly, I can't believe it. It could be a coincidence, but we literally filled the gap to the penny, right? And that's what the 200 also aligned with it as well. At least on my chart it did. And so if we go in a little here, you can see what I'm talking about. I mean, filled that gap, right, to the penny. Just kept trading around, got to the 200, tested it multiple times. And, it's, no surprise they left it sitting there right below the 200. I mean, like 0.05% on my chart. Below the 200, right at the 618 Fibonacci level as well. And so, the golden pocket area. And so, no surprise, we've been here before. And I wonder, why they left us there. Let me see, why did it stay in this range that we stayed in, to kill all those premiums? I don't understand why. Well, let's go ahead and take a look at why. And if you look right here, again, no coincidences, right? So obviously, if we go in here, I put this in here in the Discord every day. And you can see, if we click on this right here, we're going to look at where the puts and calls are at. And you can see plain as day, right? These are expiring today. Where would you want to be if you're selling these? Okay, you sure as heck don't want to go there, right? You don't want to go there to 400, do you? No, you want to stay right in this little range right here. Between like maybe what, 391 to probably like 399, somewhere in there, right? And then if we go back to the chart, let's see what happened here. What was the low? 392, right above 391. Let's see what the high was. Oh, you can't see it, but it was actually 398.49. And if we go back, look at that. Right below 399. I can't believe it. That must be a coincidence. Right in that range, it just stayed. Kill premiums galore. Let me know if you were in that ball club. I know I was. I bought a call to just play it. Look at Tesla. People say, I don't understand why Tesla didn't perform better today. Why it just wasn't rocketing and stuff. A lot of other stuff was. Meme stocks, altcoins, you name it. Well, let's look here. Where do you want to go if you're selling these? You don't want to go to those spikes, do you? You want to stay right here in that little range, right there. And if we look what we got here, let's see the range here. Went to the low of 117. And what's the high? The high is 124, between 117 and 124, right? And if we go back and we just kind of take a look at this, and we say, okay, where do we want to be? Then I'd say around what, 114 to 124, somewhere in there? Yeah, because then you're avoiding those huge spikes to the right and to the left, where all the calls and puts are. Wow, amazing, isn't it? Or could be a coincidence, depending on what you believe. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so was that a coincidence? No, of course not, right? I mean, you have these weekly ranges you can look at, and you can look at for options. You can calculate in different ways. For Tesla, for example, it actually went past his weekly range on Monday. It was like 124 somewhere in there. But then, we hadn't gone there since, right? And then you end up with the SPY was like 397, I believe it was, or something. So we still got tomorrow to go. But, a lot of these stocks, index, and everything else were at these weekly ranges, the top, right? And when that happens, could be a coincidence, But we tend to not perform very well or go down in the morning and stay in this little tight little range and stuff. And so, that's what happens, right? And so going on, and again, what's tomorrow? Why are we sitting below the 200? Why are we sitting in the 618 Fibonacci and golden pocket, whatever you want to call it? Why are we sitting right there? Why don't we just blow through it? We got earnings tomorrow. Could that be a coincidence too, that we just happen to be kicking off real earnings season tomorrow with all the banks? And guess what we're going to find out? A whole lot about us, a whole lot about the consumers, right? Because they have all our financial data, our investing data, our savings data, all of it, right? Real estate data, cars, loans, foreclosures, delinquencies, they got all of it. So could be a coincidence. Again, wink, wink. Let me know in the comments what you think about that. But, I know a few things about us already before they even say anything, is that we're still spending. You know why I know that? Because when I see American Airlines come out and say this right here, remember, this is an airline for crying out loud, charging unbelievable prices for the tickets they're doing. Well, they come out and say, hey, man, life is good. Life is good. And what I mean by that, here's what they're saying. They forecast a higher fourth quarter profit on strong demand for travel during the key holiday season, sending the shares up 5%. I believe it ended up like 9% for the day, which is crazy for an airline. And then the company also forecasts a rise between 16 and 17% in revenue from the fourth quarter. That is up from what they actually guided was 11 to 13%. So they increased that stuff because we are still traveling, folks. And it ain't no dang coincidence that 2 casinos/hotels hit 52-week highs today. Wynn hit another one because I had one yesterday, and now Las Vegas Sands is actually hitting a new 52-week high now. So is that a coincidence or what? I mean, let us know in the comments. You traveling? Is it like it's 1999 all over? Nothing going on? Don't see anything? Don't see the economy slowing and stuff, right? And so I usually don't break out the whiteboard, but I'm going to write this down. I'll tell you exactly, to me, why this is happening. You let me know in the comments what you think. First and foremost, because I talked to the members, I talked to you guys, see you in the comments. Actually, that's terrible. Hold on, my handwriting is horrible, so I will try to write big for you. Jobs. Can you see that? Jobs. What do you mean? People in the comments, people working 2 jobs. The economy is horrible. What's the key word you use in that sentence? They're working 2 jobs. They have 2 jobs. Everybody go out and find them. What did I show you with those big tech companies laid off? Those people are finding work within 30 days because there's so many jobs still left out there to be filled. Does it suck to work 2 jobs? Probably so. Some people working 3. But guess what? They're there to be filled right now. That don't mean it ain't going to change. Right now, they still got what? Paychecks coming in, right? You know what else they don't have? SLP. Can you see that? Student loan payments. Still ain't got it. Ain't going to have it until June. That is your 3rd biggest expense in the household for those who have them. And a whole lot of people have them. And some couples each have one, right? I've known couples that had $800 to $1,000 of student loan payments a month, right? On average, between $250 to $500 for some people. Don't have it, ain't had it for 3 years, right? Has it been 3 years? Unbelievable. Yes, don't have it. So guess what? They can go spend on travel and vacations and all kinds of stuff. What else we got here? Oh, I know what it is. BTI. BTI. Big ticket items. And it's like I showed you. What's happening? The car industry going to the toilet. People aren't buying cars like they were doing. People aren't buying homes like they were doing. Now these interest rates and all that stuff. Some people are, but most people are not. What does that mean? No more 20% down payments. That's in your bank account. Not only doing what? Drawing interest, right? Buying treasuries, putting it in the market if you want to, right? Going on vacation with it. That, whatever it costs, a car payment. What's the car payment? $300 to $400. By the way, the average interest rate on a car payment now 6%. Right? Put it down in the comments what it was 3 to 4 years ago. It wasn't no 6%, right? And so big ticket items, not happening. Student loan payments, not happening. That's more money to go out and spend, right? What else we got here? Oh, here we go. I know this one. CC. Credit cards. Credit cards. You can get them anywhere you want. All you got to do is have a pulse, right? Average interest rate between 17 to 20% now, by the way, which is astronomical. And I think it's like, what is it, 40% of Americans now carry a balance from month to month. And so it's a lot of folks, right? Don't matter. Credit cards, swiping them up, good to go. I need a balance increase, no problem. Here you go, here you go, here you go, no problem. Especially with banks now because their lending segment is trash. So they're going to definitely let you run those credit cards up. No problem. Keep making that minimum payment. See how it works out for you. That's what's happening. And 70%, and I think I'm being generous. 70%. What is 70%? As far as I'm concerned, I could be wrong on this because it's a total guess, but I'm just looking at my ecosystem. Let me know in the comments what you think. 70% of the people have no clue what's going on in the real world right now. They have no clue the stock market, what's going on in the stock market. They have no clue the interest rates have gone up this much. They just live with blinders on. You know some people like this. I just saw a family member I ain't seen in a long time, and they didn't know the stock market had been going down. You know why? They're not in the stock market. They just aren't. It's not their thing, right? They're in the dot-com bubble. Where was I at? In college. Had no clue the dot-com bubble was going on. Wasn't in the market. I was in school, working full-time, right? 70% of Americans, maybe it's 50, I think it's 70 though, don't pay any attention to what's going on in the market, what's going on in the economy. All they know is they got a job to go to. Maybe it's 2 jobs to go to, right? They're getting paid. They're able to pay some bills. Their rents are actually coming down. And what do I mean by that? Check this out. This is what I'm talking about. First of all, you can see right here by our friend Charlie over there, Vallejo, the rent's been coming down. You can see that is a significant drop. Maybe in your area it's not the same, but that's a big drop, right? But look at what's happening with inflation when it comes to housing, shelter, and all that. It's going up. Why? Because it's a lagging indicator, but rents are coming down, right? I'll show you something else that's just crazy to me. I showed this to one of the members. I ran across this chart. This is up at the top there. That is home builders, right? Home builders. Look at their stocks just flying through the roof. Look at pending home sales. This is what I mean by we're not buying big ticket items anymore like we were. Look at that. That's the biggest divergence I've probably ever seen. But anyway, that gets me away from my point. But 70% of people, look, they're like, hey, I can pay my rent. I'm paying my car off. I ain't got no student loan payment. Got extra money in the bank. You know, I'm good to go. And that's what most people just care about in life. That's it. That's why you go to any airport, it's busy, right? I went to pick some up from a bus a couple weeks ago. Busy as can be in there, right? People are traveling, right? American Airlines is going, woo! Life is good. Wynn Resorts, woo! Right? Las Vegas Sands, woo! Rolling those dice for me, baby. Bam! Not only traveling, but we're gambling, right? I mean, think about your own life. Put in the comments. Have you changed it? Now, remember, though, what group are you a part of? You're a part of the group, the minority, I've told you before, that actually pay attention to stuff, to what's going on in the economy, to try to prepare, right? You ask, I guarantee you ask the average American, you say, hey, you know there's probably going to be a recession this year? Most of them will ask you what a recession is, first of all. Or if you say, hey, you know, there's a lot of indicators, like the inverse yield curve and all this stuff, and the rate and all these rates in the Fed, most of them are going to straight up ask you, what is the Fed? What's an inverse yield curve? What indicator? And what are you talking about recession? That's what most people will say. I'm telling you. Just go out and try it. You know, Jay Leno used to do that. Go out and try it. You're going to be stunned. I told you, you are in the minority. That's why I say congratulate yourself, pat yourself on the back. If you're trying to learn, educate yourself, and stay up to date on things, good for you. Most people get paid. That money already went into 401k, into an IRA, into a HSA, something like that. They don't even pay attention to it. And they sure don't pay attention to what's going on. Most people don't turn the news on anymore because they say it's depressing, which, by the way, is true because only bad news actually gets people to watch, not good news, right? And so they just don't know. And so that's why if you're asking, so why is people out there shopping like crazy? Remember what Costco said? People spending, right? They're in the holidays, right? People traveling in the holidays. Why? Because they don't know. They have no clue. And guess what? There might not be a recession. You don't know that. We don't know that. The indicators are pointing towards it. But remember, hey, still got excess savings, and they're able to earn money on those savings now, which you didn't have an option to do that before, right? You wasn't going to put money in a CD or any kind of savings account. They were jokes, right? Now all of a sudden you're like, wow, I can get 3, 4, 5%. People laugh at it, but that's better than it was, right? And so that's why this earnings season is going to be one of the most interesting to me, because everybody's calling for the consumer to fall off a cliff. It could happen, but it's hard to fall off a cliff when everybody's working. I'm just saying. I'm just talking. You know, not trying to upset nobody, but that's for real. All paychecks are coming in. You know, I still talk to people. Hey, still can't find enough workers for their business. No, still can't find them. Still got a worker shortage. As long as that's happening, as long as that market right there, and those job numbers did come out today, and the claims were less than what people thought it was going to be once again, as long as that's happening, we can just keep going. It may go sideways, you know. And so you got that on top of, you know, China reopening. Who knows if that's going to happen. I'm going to show you something tomorrow. Somebody who covered China, who actually worked in China, to tell you how China's going. And I got a lot of stuff tomorrow. But anyway, I can't fit in this thing. But a lot of stuff I'm going to put in tomorrow for you guys. And yeah, I mean, another interesting day. And again, the banks Could have been another catalyst, right? Remember, we've sat here before this 200. We've sat here before the descending channel, and we've got sold off multiple times, right? Is this going to happen again? I think, you know, tomorrow we'll find out when those banks say what they got to say. So anyway, let me know what you think down in the comments, guys, what's going to happen. So hope you have a good one, and I'll see you tomorrow.